Good afternoon, everybody. Thank you very much for your attendance this afternoon. For those of you that don't know me, my name is Gary McCarthy, and I'm head of risk at Spark Crowdfunding. Risk might sound like a scary word, but actually we don't see it as just threat, but also opportunity. And whilst we all are looking anxiously at the, I suppose, budget season just upon us, please do remember it's also EIS season. We have a very, very exciting pipeline for you before Santa arrives, before Christmas, spread across a number of sectors. Sustainability, where we have a representative from that sector today, which I'll introduce to you in just a few moments. We have opportunities in electric vehicles, in AI, software, and also testing in the life sciences space, along with another med tech. So some really good opportunities to look forward to. But today, we are with another EIS eligible company. I'm delighted to introduce Tom Cotter, Chief Executive and founder of OceanR. This is a really interesting and timely conversation with Tom. They're just coming off the back of a record month. They're very, very interestingly positioned as a B Corp, which is an essential part of any company's efforts and strategy to be in the sustainably compliant. OceanR is offering in terms of designing, manufacturing and supplying high-end activewear for a variety of sectors is really interesting opportunity for investors. With already, I mean, this is not a early stage opportunity. They're already on track to generate 3.5 million euros of revenues this year. So really interesting, some great logos and partnerships and presence in 70 plus countries overseas. And I think I've said just about enough, apart from just a little bit of housekeeping. If you have any questions for Tom at the end of his presentation, which would be 10-15 minutes max, please put them into the Q&A section tab at the bottom of your screen. So without further ado, Tom, I'll let you get on with it. Thanks very much.
Thanks, Gary. And thank you everyone for joining. I'm a little bit hoarse. I'm in with one of our fabric suppliers at the moment, and I had an early start yesterday and it hasn't quite come back yet, but please bear with me. As Gary said, I'm more than happy to answer any questions at the end, but hopefully I can answer anything that you're thinking about on this presentation. I started the business, just to go right back, I started the business with two friends about 6 years ago. And we started firstly as a consumer brand. And we effectively found all of the struggles that a lot of brands fall into in terms of stock holding, in terms of working with retail, in terms of really long payment terms, and also trying to potentially set up your own retail space. So we pivoted the business after about 18 months when we started to get a number of inquiries from companies that saw us as being first in class in terms of sustainability and wanted to transition what they were currently doing over to a sustainable option. It took me probably about 6 months for the penny to truly drop that the consumer direction was important for telling the brand story, but realistically the money making arm of this, for the revenue channel, was going to be in that B2B market. So if you can picture a number of our clients, they are anything from resorts, super yachts, corporate companies, right up to very legitimate brands around the world that are looking for this sustainable option, and they want to point all of their stakeholders, whether that's internal or external, to a reputable brand that is making their product for them. We typically work with people whose main revenue model is not designing clothing themselves, but as we grow as a company, we are getting a number of clothing brands also requesting to work with us. One brand just we secured a couple of months ago. It's a 350K a year over the next 12 months for us. with plans in place to scale that from that point right up to 1.5 per year, and they would take more if we have the capacity to do it. This brand is moving from China back to Europe because their customers are craving a more local and a more sustainably produced garment, hence where we come in. They're now adding our logo to this product and then pointing all of their retailers or all of the people online that are working with them already, pointing them to our website and pointing them to our social media to prove to them that they're doing it the right way. Again, I've probably gone into this slide just already. The main target for our customers is just this massive drive from that they're either being asked to do it by their current stakeholders or they truly believe it. The problem being is that when we're working with brands such as the Four Seasons, Richard Branson's home on Necker Island, if they're seen doing it the wrong way, the brand reputation comes massively under scrutiny. So the idea of a Four Seasons or a Ritz-Carlton, if their uniform being made in a low ethical country, it brings the scrutiny onto them straight away. The second part that we offer is, yes, our products are sustainable. That's great. But the other differentiator is that we're customizing their product completely to them with a very small logo of OceanR included. So we have an internal saying, which is a small logo that says a lot. So we do not want to be the brand that's at the front of it. We want to actively be that ingredient brand to allow our customers be front and center, but then we also build our brand and become known as the best in class for sustainable production. We have just on the sustainability side of things, we have three main pillars: people, product, and planet. My argument to anybody is that it needs to go in this order. Again, we can have a discussion about it, but truly I believe that there's no point in people making garments made from plastic bottles or ocean waste if the people that are making them are still being treated in an unethical way. Hence why we have invested over the last 18 months in acquiring our own production facility in Latvia. We've been working with this facility for just over 3.5 years, and we looked at partnering and joining sales and marketing in Ireland with a centre of excellence of eco-friendly production in Latvia. The products, we basically only use organic and recycled materials, but the big thing for me is the next two phases here. We have a take-back repair program that we offer to some of our VIP clients. More recently, we took back Necker Island's uniform and converted them into the laundry bags that they would use in their rooms. The big one for me then is the life cycle assessment. So we have a full life cycle assessment where you can get carbon, water consumption, miles traveled, and that QR code comes on every single garment. We then work with a non-for-profit where we try to contribute to our carbon offset, where we plant between 200 and 400 mangroves monthly. And then we work with fishermen and another non-for-profit where we pay fishermen around the world to collect plastic. Again, sustainability is such a broad topic that any one of these may be applicable to the organization that we're talking to. Some people are fully focused on carbon offsetting. Some people prioritize that the products are made in Europe. Others love the idea of a life cycle assessment so that they can comply with their ESG goals and targets. I've given you a background of kind of where we started. We founded the business. We generated a small bit of revenue. We then came into COVID years, and as you can imagine, we're really under pressure. We moved to making face masks in 2020. We did very well with the face masks, and again, then 2021, our world wasn't reopened, and the face mask market was truly saturated. We then raised a little bit of money and through equity, and we ended up acquiring this factory in Latvia. We've combined their sales, gotten rid of some of the low value customers that they would have had, and they really are now a center of excellence. They were set up initially for Adidas sailing, and Adidas cancelled the license agreement, so they were left with this fully set up Latvia production house where we can do small volume manufacturing, but then they have all of the partnerships that they would have used with Adidas to do things like jackets, shoes, wetsuits, if we needed to do that. This year, it's been a good year. We're kind of up to this 300 to 350K per month, which is terrific. My goal with this funding is to bring us as quickly as possible to 500,000 per month. And we're in a position now where for a junior salesperson, we know that they're delivering on average about 25K for the company a month, but the more senior salespeople are delivering about 50. So the money that we raise will basically be brought straight into adding 2 or 3 people into our sales, which should bring us up to that 500K mark. And again, stabilize there until we get to the end of next year. Here's a quick view of some of our products. We have Thanda Island is down in Madagascar. Necker Island, their uniforms. Necker is about 120 to 130K a year customer of ours. Four Seasons Orlando, again, home of merchandise in Florida, and we've been working with them for the last 3 or 4 years. You can see how the products are all very similar, but we customize it to them. This Arctic Expedition jacket is our biggest customer at the moment, and we've just verbally heard confirmation that they've extended out until 2028. They bring in roughly between 400 and 600 grand per year, and we make all of those jackets out of recycled plastic bottles, and we give them that QR code, which can tell the full life cycle analysis of that product. We did a lot of work with the Olympics, just through the sailing division of the Olympics this year. Again, a contract that we would have had from World Sailing, and again, just an amazing brand to be with at such an important time. The big one for me is, as I'm sure as investors, if you're sitting there, you're going, it's great, it looks well. I don't think anybody can disagree with that. But is there substance to the industries that we work with? We typically have about 250 organizations around the world, and I've always known in the back of my mind that I would love to take the sustainability that we've brought to the luxury resort and the super yachts and bring it into a more mainstream market. So we've just secured about 3 months ago one of the leading 5-star hospitals between the UK and Ireland. They're just to give you an idea, they have about 800 staff, growing to about 2,000 staff in the next 12 months. That contract on a yearly basis is worth about 200 to 250K, and obviously as they grow their headcount, our revenue will grow with that. Again, Gary mentioned some of the logos that we have. Some people, to be completely honest, some people might order 3,000 euro worth of hats, and then other people might order 100K of uniform, and then some other people might order 500K of Arctic jackets. And, you know, again, I think no one can disagree that the logo base that we have is quite impressive. So I can circulate this afterwards. I won't go into all of them, but this would just be some of the testimonials that we've collected over the years. And our team. So as I mentioned, our sales and marketing division is in Cork. So just at the Kinsale Road roundabout, we have a team of about 16 there, ideally growing to 20 once this is finalized and complete. We brought in a financial controller earlier this year, which has been a brilliant support to myself. This is the small team in Riga. There's actually a few more. There's about 50 to 55 at the moment. And we have the capacity right now to double our output with the current team, plus maybe four or five extras. Again, 4,000 or 5,000 euro expense a month. It's not massive to increase our output. I kind of went through all of this. Again, at the moment, just to give you a bit of on Riga, The team were set up, like I said, for Adidas back in the early 2000s, and Adidas worked on a license agreement for Tier 2 sports. So they got a new CEO, and he cancelled the license agreement as a new way forward for Adidas. And as a result, these guys were left with no product to put through. The first year we gave them about 50K of orders. The next year we gave them 200, then 1 million, then 300K. And it became clear that they were incredible at low volume production. They R&D, design, procurement, they take all of that in-house with them, and they let us focus on sales and marketing. They're incredible company, completely kind of self-reliant. I visit maybe once every 2 months, but effectively they run themselves. A bit just on the market size, I've said this in the video. If you focus on the figures on your right, obviously the high figure that people pick out of thin air, really, it's 280 billion. For me, if we focus on the high-end, eco-friendly end of the market, and we secure 0.25% of that equals 100 million. And I'm under no illusion that this is an industry that comes with a lot of preconception of, you know, the issues that I experience running a consumer brand. I stress that we actually have removed 90% of those. We're setting our business up for recurring business with these brands that I've represented. And I really do want to grow to being a 100 million euro brand without all of those negative connotations that the apparel industry has with being a consumer brand. From going forward, we're on course at the moment to do 3.5 million this year. We'll between break even and 5% net profit on that. Goal next year is to obviously grow, but I don't want to put ourselves in a position where we're scaling at an uncontrollable rate. So we're quietly confident that with the current brands that we have and the increase with them, that we will be able to add 20% onto some of those guys, with plans in place to already double the value of a number of those guys. The goal would be then, in about the next 18 months, would be to go and do a Series A, where we're looking at somewhere between 3 and 4.5 million. That would probably be Q4 25 or 2026, with the goal of then giving us the capital to grow this to being a very major player. I'll leave this slide up. I know I'm massively over time, so I'll leave this slide up for a minute. On the left, you have some key reasons to invest. On the right, you have valuations and what we're using the money for. Just to stress, we're at a break-even point. The money raised will be going straight into sales and marketing, and I'm fully focused on bringing a 500K month to us as quickly as possible. So thank you all for listening. Pat McIntyre, who's on the call as well, he'll join me for the questions.
Thanks, Tom. Welcome, Pat. I'm going to ask my colleague Fergal Power to join us here and field a couple of questions from our attendees. If you want to go ahead there, Fergal, that'd be great.
Hi, Pat. How Tom? I'm just have the first question is actually just on the products. So maybe for you, Tom. You mentioned there 18 fabric specs. Is there anything within that they would allow you to maybe enter into the sportswear uniforms? You know, thinking of rugby and the Premiership, etc., cricket. You know, obviously you're in sailing. So is that also a market that could be looked at?
Absolutely. So I should have mentioned. So we have an R&D hub that we work with all our fabrics. We've just explored a seaweed fabric. We just created a T-shirt with a seaweed fabric. We have a hemp collection. We would do a number of major sports where they're not heavily sponsored at the moment. So we would have had a call with Munster Rugby, 18 months ago, and they obviously get paid a large fee by Adidas to be able to produce theirs. Where we would come in is we're working with, say, E-Rally at the moment. We just did a deal with the leading E-Rally car company for, again, their first order is 40 grand, because they're very focused on sustainability, but they don't have these major sponsors as of yet. Similar to an order we got from a cricket team out in Dubai, was for 75 grand. And again, not one of these leading heavily sponsored organizations, but they did want that customized eco-friendly offering. I'm sure as the company grows and as we build the brand, we will obviously start to grow those relationships with those bigger sports.
Tom, if we could just stay with the sort of the expansion plans and I suppose just around the challenges with scaling up. You know, what are those challenges that you see coming down the tracks, and how do you, I suppose, plan to address those?
Yeah, I think it's always, and Pat can add in at the end, but for me, I always look at it from 2 points. Obviously, we have sales and we have production. So we've been around the block with our sales approach. We set ourselves up very similar to selling software. So we have lead generation, SDRs that go hunting, then we have new business, we have customer success, and we have account managers. And I really feel like in the last 12 months, we've really nailed our approach to, from this time last year, we did 50K in the month, and now we're at 300K. So we're definitely doing something right in terms of sales. In terms of increasing capacity in the factory, Chris Stapps, who heads up our factory at the moment, we basically have a full scaling plan for tripling or quadrupling the output without taking any square footage more. So we basically would need to add in 10 new seamstresses over the next 18 months to be able to facilitate the scaling of our sales, which it's 10K a month. It's not a major cost implication. So Pat, you add in anything there if you think it's different.
Yeah, no, I would say really the major element, Tom outlined what the sales team need to be able to do and how we look at sales and how we look at the world, how we look at the different markets. So a number of, let's say earlier last year, we certainly began to move, once we acquired our factory, we began to move on partnerships with other manufacturing entities as well around the world. And we have about 5 of those in place. So right now, and that was to ensure that the supply chain and the production capacity was there as the sales would move up, and without significant investment. So the main investment has been in our own facility to buy it and to keep control of that first 3 million, first 5 million, first 10 million of revenue. But the relationship with other factories gives us up to 20 to 30 million of revenue capacity right now. So we're very comfortable with where we can grow capacity. So some of the big contracts that Tom indicated there will most likely be outside our under the control of our Riga factory, but actually being produced in other locations. So the biggest challenge is supply chain and production capacity. And for that, we're already in play to be able to run 20 million of product through our current supply chain. The sales, of course, is a slower process. And one of the things that people maybe who are listening today and have been involved in startups or invested in startups, one of the big changes in a startup when it needs to grow its sales is the ability to move from just founder top team capability of sales to actually a wider sales team, so that actually you can scale the sales method. And Tom has indicated there that we're actually really have done that now. So Tom can move away and look at bigger picture developments in terms of sectors, big customers, but because we have a back team that can actually deliver a scalable sales method across the brand partners, who are the kind of, let's say, 10K to 70 to 80K guys, and across the enterprise, which are the plus 100K customers. So scaling is about supply chain and production, which we're very comfortable with, but we'll keep investing in because we always want more partners than we have product. And then in sales, it's about getting great salespeople, working great sales method, and allowing that to scale and not be dependent just on founder capability to sell the company and sell the product.
Thanks, Pat. Fergal, you got something there?
Yeah, just apologies, I got disconnected there. I just have a question in from an investor regarding if they were to come in today, what kind of exit could they expect, and kind of generally what's the timeline?
Perfect. I'll again maybe same approach, Pat. I'll just give you my 2 cents, and Pat, you can add as well. And there's another question there as well, Fergal, that I'll answer as I'm answering that, just on what the competition is. There's a few companies that are growing the same way that we're growing in this eco-friendly space, and we've basically hired one of the sales consultants, and that's from one of those businesses that's already at kind of that 30 million euro revenue, and it's basically partnering with local customization organizations. So if anybody's working in an organization, I would imagine they get their jackets and their fleeces by somebody locally in Dublin, Cork, or wherever they're based. We're now going after them as our partner. So we're having calls with the people who do Airbnb, Netflix, these organizations who are they're the biggest corporate branding companies in the world, and they don't have a sustainable option, and they don't have the message that we have, and we're basically plugging straight into their network. So these guys are typically, I'd suppose, would be our typical competition, but instead of us seeing them as competition, we're now going in to support them with their ESG goals and values, because they're typically starting a bit later. So for an investor coming in at the moment, we're looking, I've always set up this business with an exit in mind. The goal for me would be to definitely exit within the next 3 to 5 years. But I can obviously feel that if we hit the net profit margins that we're looking at in the next 12 months, that this becomes a very profitable business in a very short space of time. So if we're doing a 20% net profit at a 5 million euro revenue, we may make the decision to kind of reinvest to push that on a bit. But I would even say it's going to go 2 ways. It'll be an exit within the next 3 to 5 years. But if everybody's receiving dividends and everyone's happy with that in the 3 to 5 year timeline, that it would only be done if the net profit was at the level that we really need it to be.
Okay, great.
Yeah, the options really for us, and we do get, I think maybe every company as it goes through its startup, people express an interest. Because we're working in a global environment. We're, as Tom has mentioned, some very large companies and some very large distributors and big brands. The company he's mentioned, where we've just secured all of their retail and is coming out of China. Some of these guys are the kind of companies that would either take an interest in terms of a buyout or a partial buyout. So and the other option then is in terms of money coming into the company to actually buy out current equity holders. So it could be on if we look at, let's say, an A round in the region of 4 to 5 million. So any of those options will open up options to make offers to current shareholders in the business. Clearly, a buyout is a buyout, so that'll make an offer to all shareholders of the business. A partial buyout could constitute a partial buyout and potentially changing share ownership, which would mean that an offer will be made to current shareholders, all current shareholders equally, as to maybe exiting or partially exiting. So we see that in the next 3 to 5 years. We're on an upward trajectory. We're moving in a global environment. Our brand is getting a really good traction. We have amazing customers, like they're to die for customers that we have, and we're retaining them and growing. So we see it as 3 to 5 years. My own gut feel, it'll be a 5-year deal that'll be really valuable, or else we go earlier 3 years and we probably sell out part of the company. That's how I feel. But realistically, we're moving on a trajectory that we know there's going to be an interest to make offers over the next 3 to 5 years.
Thanks, Pat. Quick question, just coming from talking to a couple of VCs last week. They were sort of feedback from their own companies in their portfolio, not quite in your space, but talking about sales is humming, marketing is humming, and the area where they're having a little bit of a more challenging space. And I'd be interested to hear your views, Tom, on this. You talked about adding, resource on the sales and marketing side. Is really talk to us about the pipeline in terms of how you see it for the next 2 years. I know it's not quite a hockey stick, but you're already at a fabulous sort of 200% growth rate. But how does that look? And you might talk to the different sectors, but also, I mean, we have to be realistic. What have you got in there for your assumptions on attrition rates and renewals and all that sort of? If you could just give me that'd be great, because it's probably a thing that's in the VC world at the moment on this type of business.
It's I would say from my point of view personally, it's probably quite frustrating, because I think I think our pipeline is overly full and the opportunities are constant. So even this American company that's moved from China back to that wants to move back to EU, they'd be interested in working with us on a 5x what we're doing with them. But again, having the resource to manage that from a sales point of view or an account point of view, I currently would take that account, obviously, and we'll be looking to scale that over the next ASAP period, going, let's say within the next 3 or 4 months. However, if you're looking at our day-to-day business, the 10s to the 40Ks, I just need bums on seats. But, in order to convert. Again, though, we've been in this situation, and I think if you talk to the VCs, I know a lot of the hurdles that kill a lot of businesses is scaling uncontrollably. The last thing I want to do is go and bring 10 salespeople in and break what we've built. So we're trying to do it in a very methodical, like say organic growth, but not to come in and say, yeah, we're going to do a hockey stick in 18 months time and it all falls over. Whereas I would much prefer to deliver the figures that we're talking about right now by adding somewhere between 2 and 4 people to our sales structure in Cork. Once we then start delivering the EBITDA that we're confident that we can deliver, then we can start to reinvest in the company and take that risk of, let's set up a US arm where we have 1 or 2 salespeople based in New York or California. So that would then deliver the hockey stick, but in a much more controlled way than letting what we've built today be broken.
Fair enough. Thank you. Fergal, anything from you?
Yeah, just a quick question actually on the life cycle assessment, the QR code, the kind of the tech behind it. I like it. I think that's going to be very important for customers and for brands to tell their story on what exactly, where the source is. Can you elaborate a little bit more on that? Is it does it lead on to the brand's website, or does it bring kind of the person back to OceanR?
No, it's basically linked to the product. So every product that we create, we have to do the life cycle assessment for. So if a guest on Necker Island walks past their gardener and they see the QR code on the shoulder, they can scan the QR code and they'll instantly see a picture of that polo shirt, and it will have carbon, water, miles traveled. And then if they flick over, it will tell them the equivalent of that equals number of light bulbs, number of 2-liter plastic bottles, all of that sort of stuff. Again, when we're doing tenders and going for larger projects, this becomes incredibly important. When we did the hospital, we were able to do the life cycle assessment, then times it by the number of items that they ordered to give them their complete impact report for their uniform. So it for me, it's probably one of the most powerful things that we're doing. But again, when you're a junior salesperson, the story around, your polo shirt is made from 15 plastic bottles is a much easier thing to talk about. So they tend to hold on to whatever element of the story that they would prefer.
Excellent. No, it's good.
Tom, last question for me, and it's I suppose it's an extension of the exit question. It's sort of a more near-term query in terms of Spark investors and I suppose, milestones. But what would you see next year, so 2025, as being, I suppose, potentially a valuation inflection point, something that would kind of really turbo boost the valuation, or not? But if there is something in the next 12 to 18 months, what would that be? Probably on the margin front, I'd imagine. But what's that number, and what does it mean for valuation? I know we can't forecast the future, but in your thinking, and it doesn't, you don't necessarily have to accept a bid or a partnership stake,
For
whatever
sure.
it is, but you can certainly talk about the kind of number you'd be thinking of, based on industry knowledge.
Yeah, it depends where we draw the investment from, I suppose, obviously. When we talk to Series A in the US, they're focusing hugely on the growth. We've somewhere between 70 to 100% growth year on year for the last 5 years. So they don't worry about EBITDA multiples at this stage. They're much more focusing on, if you can do this for the next 4 or 5 years, you're going to be in a very, very serious position. In terms of that being one answer to your question, just to give people an idea, we've worked on 2 bids to do eco-friendly products, and the contract would be 10 million a year. So one was the Irish Army. We did the tender for it, and we had one criteria, but we lost to the guys that are doing EasyJet, BusAir, and they don't have the sustainability play, but they're already in that tendering model, and that was 10 mil. We were also working with a public company in the US, and they were looking at ordering one polo shirt, €12 polo shirt, but they wanted 180,000 polo shirts. So again, a 14 million euro contract. So the bigger we grow and the more conversations we grow, I think there would be a conversation where somebody comes in at a 3 or a 4 million euro contract, and that would really deliver a much higher return for the investors currently. And Pat, you can probably add in more on the answer around valuation as well, if you wish.
Yeah, look, I think next year, look, this year we've gone to kind of 3.5 million, and we kind of feel we've had our factory now for 2 years, so we've really settled in the company. We have 200 to 300 kind of really good brand names, customers that we're working with. As we go through 2025, it's relatively conservative. We're looking at getting to a really safe 5 million. But I think it's the way companies need to be looking for. Let's get to a really comfortable 5 million. Let's make 17.5%. We're not saying 20%. Let's have the sales team built. Let's prove that we're retaining our repeat business with our customers at 80%. So we've effectively got a recurring business model. So the bulk, as a substantial amount of the revenue that we're going to win in 2025 is already secured by the 80% retention rate we have with these customers now. So what we're doing then is we have to obviously grow the customer base, grow the sectors, grow into the new sectors that we've mentioned, and particularly healthcare, which is a brand new sector for us. So we have to be more cautious with that, and we are cautious. We're not going to go head on into healthcare. We're going to cautiously open up healthcare around the world for ourselves. And then the next element is actually to position as some of the projects that Tom has outlined now, some of the customers we're talking to, which are in the range of 1 million to even up to 20 million annual deals. We're not planning to win all of those in 25, but we are planning to be a very well structured company in 25 and to begin to secure the first set of those types of customers to deliver to 26, 27, and 28. So it's not about just winning that one big deal, because one big deal is only one big deal. It's about winning, like our customer in the Antarctic, where we're now on our 4th year, if not 5th year, with a very substantial deal. That's what we got to offer as a value add. We can win 500,000 every year. We can win 10 million every year. We can retain 80% retention on every customer that we win. And now we're proving not only can we win new customers, but that everybody stays with us and our brand gets stronger. So 25 is about being really, really safe 5 million company, driving towards much harder thereafter to being a 28 to 30 to 40 to 50 million company in the following 3 to 5 years.
Thanks, Pat. Thanks, Tom. Well, there we have it. Nice to finish on a steady but still serious growth rate. I mean, as I said, you nailed it there a bit earlier, Tom. You know, it's a 70 to 100% growth rate for the last 5 years. That doesn't seem like it's slowing up. There's obviously the pipelines looking healthy, opportunities in other sectors. Mention it again, EIS, it's eligible. I think the B Corp sustainability play is massive. That you're seeing the deals elsewhere in other sectors. It's become a prerequisite. We were only talking about it this morning. There are now deals being done in tricky sectors, even textile or mining. And the only reason they're getting done is because these companies have signed up with sustainability partners and they're ticking boxes. It's a big deal. It's a big way to get to finance. OceanR is part of that. Very much a partner for the future. The logos are fab. The growth is great. The valuation is really interesting versus what we're hearing for 2025. And as you say, you're trying to build for the future on multiple deals, but one deal certainly changes the perspective of the outside observer. Whatever about you as a management team, your longer term plan, your strategic view of where OceanR is going. So well done. Thank you very much, everybody. And let's hope the budget is kind to us all. And don't forget EIS. Thank you.
Thanks, Gary.